Hello, I'm James Patterson, Partner and CEO of Knight Frank Australia. I'm extremely excited to welcome you to the 17th edition of the Wealth Report 2023. Thanks very much for joining us. Before we begin, Knight Frank Australia would like to acknowledge the traditional owners of the land where we work and live. We pay our respects to elders past, present and emerging. Today we're talking to you from the penthouse at One Barangaroo, an iconic Sydney residence, which is a development Knight Frank has been proudly involved with from its inception. And if you look at the amazing view from the penthouse. Sharing the Wealth Report 2023 allows us an opportunity to share our thought leadership, insights on private wealth, prime markets, investment risks and opportunities. 2023 is an important moment in time for private wealth, particularly the ongoing interest rate rises and inflation. These economic factors have heavily impacted investor behaviour in not only Australia, but around the world. We do believe, however, that it's time to look beyond that and take advantage of the very real opportunities emerging across global real estate markets. The key theme for 2023 is all about a reset with the new monetary environment that we are entering into. There are three key takeaways of the Wealth Report: peak inflations and lower debt costs. Real estate is a critical part of investment strategy for both commercial and residential, driven by a desire for income and diversification, and the ability to travel and move around the globe, which is a COVID legacy. We're seeing a dramatic impact on luxury residential and office demand. Right now in every area, residential, living sectors, offices, life sciences and logistics, we're seeing that there's a need for greener and more innovative spaces to meet both occupier and landlord needs. And we're working with Janine Cranston and our ESG team to deliver that. So now is the time to be well informed. With that in mind, I'll now hand over to Erin, Michelle, Pat and Scott, our expert panel, where they'll take you through the global findings from the Wealth Report and shed light on how they affect the way you live, work and invest in the Australian market.
The Wealth Report covers 4 chapters which I want to explore further from an Australian perspective: wealth trends, investing in commercial property, prime luxury residential and those so desirable investments of passion. We saw an extended period of instability and insecurity in 2022 as geopolitics, energy and economic shocks marked a turning point. Wealth also turned a corner, and as my colleague Kate Everett-Allen so perfectly describes in the report, it was a year of 2 halves. Each Wealth Report, we take the pulse of more than 500 private bankers, wealth advisors and family offices combined in our attitude survey. And that survey focuses on the ultra high net worth individual, so those with wealth of more than 30 million US. 7 in 10 ultra wealthy Australians grew their wealth during 2022 compared to just 4 in 10 globally. We know from the attitude survey that a key driver of this was real estate. We also know that 58% of Australian wealth portfolios are made up of real estate. So what better way to introduce our expert panel and partners from Knight Frank, including our Head of Residential, Erin Van Tuyl, Scott Timbrell, our Head of the Franchise Network and Head of Investment Sales across Australia, and Pat O'Driscoll, who heads up our Knight Frank Rockhampton office with experience in commercial, residential, hotels, islands, and of course, Agri Business. So Erin, I might start off with you. We saw phenomenal growth in prime residential sales over the past 2 years. What are the drivers making this happen?
We absolutely did, Michelle. So the prime property market has certainly maintained its higher level following COVID and the pandemic and the phenomenal growth we saw during that period. One of the drivers we would absolutely highlight is that our Wealth Report identified 49% of ultra high net worths were purchasing property with cash. So interest rates and all that entails has less of an impact on the ultra high net worth and high net worth population. 1 in 4 purchased a property last year. And we've seen a shortage of stock absolutely coming to the market, which has certainly helped to prop up the pricing that we're seeing.
So that 1 in 4 homes, was that for their own use or for investment?
Absolutely for their own use and not for investment. So certainly looking at properties that appeal to them and their lifestyle.
Okay. So another key finding that we found within the report was that private investors were the most active in the global commercial real estate space in 2022. Scott, what are you seeing throughout metropolitan areas of Australia?
I guess we're seeing a lot of uncertainty at the moment with interest rate rises, where they're going to end up, where they're going to stop. Construction is still going up, so we're seeing a lot of people out there looking to buy, a lot of capital out there to buy development sites or investment stock, but the vendors just aren't meeting the market at the moment. We probably expect to see a bit more activity in the Q3, Q4 of this year, just when I think there'll be a little bit more hurt in the market, and I think the market will basically meet.
So have we seen any signs of distressed sales at this point in time?
Bits and pieces, a few receivers and administrator stock, and we've got a strong department at Knight Frank for that at the moment. Not as much as we would have thought, but again, I think you'll start seeing that in Q3, Q4 once we know where the interest rates stop and where the sort of where I guess the market's going to go.
We're sort of looking for that tipping point.
Yeah.
To I guess, are they chasing a yield? Are they looking at traditional assets?
Look, definitely in that sort of smaller to medium-sized stocks, so your service stations, childcares, things like that. It's definitely all about the yield and what they can get. Also the term of the lease and obviously what the investment's going to look like as well. In the bigger stock, it's definitely sort of where that yield is. Again, is other vendors meeting the actual market? Probably not as much at the moment, just with the debt that is rising and the price of debt as well, trying to and the yields just aren't sort of reflecting that.
Okay. So Pat, can you make any comments around the Agri Business sector?
The Agri Business has gone through a very bullish period over the last number of years. Obviously interest rates have assisted there, but the need for protein in Australia and particularly around the world is obviously growing exponentially. That going forward, what has also been great is they've had some good seasons. Predominantly, there are patches that haven't, but predominantly there's been some great seasons. Obviously, that is paramount for good production. So,
what sort of areas are we talking about?
We're talking about throughout Queensland, basically. But as I said, there are patches that haven't had the good rains, but predominantly that everybody's thinking good things ahead. So the interest rate rises are certainly going to assist. There could be some headwinds and it could slow it down, but we can't see any significant turn back at this point.
And are you seeing this flow into, obviously Scott's talking about some more traditional assets in metropolitan areas, are you seeing this flow into other sectors?
Look, in Rockhampton and region, looking at commercial industrial, the demand is high for quality assets that have got strong tenants. Obviously the yield, as you mentioned, Scott, is very, very important. But once again, that domino effect, I suppose, from the agri, grazing, farming sectors, plus what's happening within the city itself and surrounds with regards to government infrastructure, what happens up at Shoalwater Bay with all the Defence Force training, and then again associated with the tourism, which we can touch on later, is all dripping into our pot. So a lot of spotlight on us and more positive thoughts and feel within the region than I've seen for a long, long time.
That's obviously makes the region feel a lot more optimistic about the future, especially with the weather patterns.
Yes. Interest rates always in people's minds, but it's not as dominant as it was in the last cycle.
So we know that our private clients don't just invest in one asset class. When looking at our residential clients, where have they made their wealth? In what sectors perhaps? And what sectors are they looking to diversify their portfolios?
So I think that is one of the lovely things about my job, that I get to meet a lot of people from a lot of different backgrounds. And we have clients that have made their money in a variety of sectors, from waste through to food and hospitality, down to creating and selling apps. So there's a huge variety. We're definitely aged care and healthcare is something that's being spoken about a lot more, and then also data centres is another one that's coming up. So there's a lot of variety in terms of where our clients have made their wealth and where they're looking to invest again in the future, which I think is an interesting highlight of the Australian market, that there is still so much potential to make money in so many different sectors.
Yeah, there's so much opportunity.
So much opportunity.
So, Scott, you touched on some of the non-traditional assets that people are looking at. Our attitude survey found that the highest proportion of private investors invested in retail, because I guess one would think that they perhaps already have a shop and they've expanded their network over the years. But we also know that they are increasing their appetite for non-traditional assets. Could you maybe speak to this trend that's happening, Scott?
I guess if you look at operating or existing stock in sort of medical, childcare, aged care, at the moment they're very highly sought after, but also tightly held. Not a lot traditional, or not a lot for sale at the moment. If you look at where they're at in the planning stage, so the development. So if they're DA approved or in planning, they're a little bit harder to shift, and then we're seeing a few of those come to market. It's really, if you look at some of these assets, they have longer leases on them. The yields are quite strong, and there's quite a secure asset. So that's why they are really looked at the moment and really highly sought after.
Are you seeing this as well in your region, Pat?
Yes. Following on from that, if the property is, obviously well maintained, well presented, and has got a solid tenant, the yield and a yield that reflects that, a local investor, a local or interstate, intrastate investor will take that on board and possibly even take that yield back a bit, because they know that the asset going forward is going to be solid, strong, and good for the future. It's not a fluctuating market so much, I suppose to say.
And obviously why it's so tightly held,
yes.
because they're performing reasonably
Correct.
well. And obviously as a result of tourism, Pat, it's not just about cattle up in your region. You've got tourism, ecotourism, the possibility of owning part or perhaps a whole island.
Yes, if you so desire. Yeah.
This has obviously increased through the pandemic.
Yeah, the pandemic, we were all, what is going to happen when pandemic started, and realistically, as it rolled through, and it was very trying for a lot of people, but from the property perspective, it became very much an asset class that people wanted to get into. We found that over the period of time as it rolled through, we were engaging with people who were from state and interstate that couldn't come and look. They were buying properties through Zoom, applications, and then when they were able to come out, they bang straight up to see it. So, but going forward with the tourism angle, there is, as I think Scott will also concur with this, there is a growing demand for hospitality, hotel, leisure, because the market is really booming in as far as holiday stays.
So obviously the island component, a private island up in your region, which would be considered the Whitsundays.
Yes, Whitsundays right down to where we are in the Great Southern Barrier Reef, which is the Keppel Island Group. Sure, all would have heard it over the period of time, Great Keppel Island and others, but we are seeing a lot of interest from the market to acquire or investigate at least what these islands can and could be. But we're also finding inquiry because of that pandemic for those people who want to try and secure a safe haven, as they call them. Yeah, just to get away. Yeah.
And where are those inquiries mostly coming from?
Mostly from Australia and New Zealand, but overseas-wise, it's Canada, United States, and UK. Some Asian, but more those European markets.
And this obviously comes into the CoPrimary discussion, which we're still experiencing in our cities and I guess our semi-rural or perhaps rural coastal towns for this ultra-wealthy population. Could you maybe talk to that, Erin?
Yeah, absolutely. So CoPrimary was definitely born out the back of COVID, where we started spending so much more time working from home or having the flexibility to work from home, with the improvement in technology. So rather than your second home just being a weekender, we're seeing people split their time a lot more equally between a country and coastal property and a city pad. We are still seeing this as a trend and considering this as a trend that's going to remain strong moving forward. And certainly on the ground, we can see that with, some pretty strong activity happening down in the Southern Highlands for us at the moment in terms of purchases. So it's an interesting trend that I think we'll see carry on.
So this is essentially the concept of having a toothbrush in each home.
Yeah, absolutely. You don't need to pack a bag. You've got everything you need sitting there. And actually, it's something that we're seeing even amongst our own colleagues here at Knight Frank that are deciding to live across two properties more evenly.
So I guess our ultra wealthy clients in Australia remained relatively optimistic. 65% of them expect their wealth to increase in 2023 and 29% expect to remain the same. Many see now as the time to focus on opportunities ahead, with investor sentiment set to brighten as interest rates peak. So I guess outside of the four major capital cities, that being Sydney, Melbourne, Brisbane and Perth, we've seen the share of ultra wealthy people grow from 36% in 2016 to be about 41% projected for 2026. Pat, this next decade is really important for people that are on the land. What are your thoughts on this?
As I've said, the graziers and the farmers within the CQ and the greater Queensland region have experienced in the main some solid growth. What we are seeing now is the next generation making decisions to stay or go to the land and stay on the family properties, which allows then the greater family to increase their holdings. They come back to that property or to that property with a broader education, so that allows different approaches, different technologies to be installed and instilled into the running of the property. So it's going to be a strong period ahead, from my view, with the land for these families.
And obviously that younger generation will come more technology, more sustainability. Correct. Of these, custodians of the land.
Correct, yes.
And I guess moving to the cities, and when we're talking about ESG, we know that our institutional clients are very heavily invested in the ESG agenda. But when we're talking about our private clients, 86% have actually said that they have considered the environment when making investment decisions. So Scott, what are some of these considerations that they factor in?
For Australians, it's the energy source, followed by the opportunities for green refurbishment.
So what else are we seeing on development sites, for example?
We are seeing a lot more developers talk about it, discuss it. There is a need and a want, especially for the bigger developers, are really starting to factor this in to their build costs.
So interesting, Michelle, we're actually seeing it on the residential side with the end user. It is becoming more and more important to people purchasing an apartment to understand what the green credentials are of the building, especially when purchasing off-plan.
So I guess despite wanting to diversify their portfolios, we're seeing more activity at home. We're not really seeing many ultra high net worth individuals investing overseas. However, we do see a lot more interest in Australia. Do you feel this trend is changing?
I think the trend remains the same. I think we've always, our data has shown that there isn't a vast amount of capital leaving Australia in terms of a residential property that ultra high net worths are purchasing overseas. The number I think in our report is about 12%. So what we are seeing is certainly a continued drive from international investors coming into Australia, and for example, 86% of Malaysians had investing in Australia for a residential property as their number one choice. In terms of other nationalities, I think it's an interesting discussion when we look at who has purchased in Australia. The top nationalities there are UK, US and Singapore that are investing here. When we look at where Australians, that 12% of Australians that are investing overseas, the top locations are the UK, the US, France and Switzerland. So certainly heading over to Europe. long-haul flights for overseas investors. From
And tends to be
Australia.
places where they have family and friends and
Absolutely.
and frequently holiday.
Have connections, yeah. We're also seeing, I mean, the resort towns, so resort, coastal, ski, saw an 8% growth over the last year, which outperformed many other prime markets. So and Australians certainly would have an attraction to those properties internationally, and you would see that in Switzerland and in France, that coastal and ski properties would be attractive.
So flicking to the last chapter, which allows you to enter the world's most passionate collectors. The investments of passion we collect in our Knight Frank Luxury Investment Index. We actually saw that rise by 16% in 2022. Despite all the economic woes. We know that this really outperformed majority of investment classes, including equities and even gold. So the best performing were art, cars and also watches. Scott, were you surprised by this when considering some of your clients' passion investments?
No, not at all. I was just talking to Pat about this before we came on, and yeah, I think cars and watches at the moment, if you look at sort of wait lists for these and sort of how they're traded and looked at as more of an investment over something that you would hold, you know, cars and watches, it's quite amazing. I know sort of some of the wait lists for new cars coming in, you know, over a year, 2 years or so on. By the time they actually get that, then it's almost doubled in price as well. Watches is another game there. It's not something that I keep a close eye on, but I know some of the guys in the office are very passionate about it. It's very interesting, sort of how that looks over, you know, over time.
And obviously classic cars have appreciated considerably over the last 10 years in the report as well. Being in the metropolitan area and looking at some of these commercial assets, are we seeing the need for storage of these cars outside of their residential home?
Yeah, absolutely, especially when you look at where they're living, and it's just space, and you need to have somewhere to store some of these toys that they have. We're seeing a lot of storage companies coming into play to store these antique cars or collector cars there, where they turn them over once or twice a week and keep them all polished and clean, things like that, just because you just don't have the space in these metropolitan areas.
But they obviously still want to be able to enjoy them when they
go there, touch
on
and drive on
demand.
Sunday. Yeah.
In terms of the index itself, we actually saw that art performed the best. We also know that Australians tend to invest the most into art in this collectible space and are most likely to purchase a piece of art next year. What are you seeing within homes in Australia, and are there any other interesting you know, passion investments being invested in?
Yeah, we do see some interesting things. Obviously, with more properties being purchased, on average, an Australian ultra high net worth owns 2.9 properties. Art, you know, needs to be purchased to be put on the walls, and a lot of people do use, we've seen that, use art advisors to help with that, and there's rotation of art across different properties. And the storage of that is obviously important, and definitely, again, on the ground, we do see people come in to look at property and they're assessing it for where the art is going to hang.
And obviously through COVID as well, more people were entertaining at home, more businesses taking place at home through the pandemic. So obviously art was quite important to be displayed. We know that, you know, there's a lot of collectors that are now seeing their personal art collections rise above 2.5 billion.
Yeah.
Like that's, you know, just phenomenal, and that's US. Quite amazing. Any other interesting?
Yeah, absolutely.
things
I
you're
mean,
seeing?
as Scott said, you know, watches and cars remain exceedingly popular amongst our clients. But, you know, we do see some other very interesting investments, and I had a conversation with a young boy and his mother this week, and they'd been to Japan on holiday, and he was telling me about the significant amount of money that he had spent on Pokemon cards. So you do see people are interested in a variety of different things, but I think in terms of investments of passion, there's a passion behind it. I don't think that we see people invest in art who don't have, an interest in art. And likewise, wine. I spoke to a wine dealer recently, and I was really encouraged to hear that the wine gets drunk. To think about good wine sitting in a cellar just gathering dust is just a bit sad, really. And the watches get worn and the cars get driven.
Yeah.
And I think that's, that is the passion element to it, that there's fun and interest and enjoyment. Yeah.
Yeah, that joy of ownership. Absolutely.
With the knowledge that these days, particularly with watches and cars at the moment, it has been for wine for a long time. But there is actually it is an investment. There is money to be made as time rolls on.
And it's tangible. You can
go out and
you can feel it.
touch
Yeah,
it.
absolutely.
So I guess living in a lifestyle location,
Yes.
Pat, is there anything else that you think could be added to our index in future years?
As I said, we enjoy lots of islands from where I live in the Keppel Bay region, the Southern Great Barrier Reef, and obviously boating is one of the great fun events you can do with your family and friends. And there's a great marina there with over 500 berths, and you can go out to the various islands and spend the day or the week or whatever you can afford to with time to utilise. So boating is very, very popular throughout the region. Within the city itself, art is very big. Rockhampton can boast one of the best regional art collections around Australia, and because it has been there for so long, I go back to the Gough Whitlam days. It's been there for so long, the community has really grown to appreciate art, and so part of art is part of the fabric, I believe, or certainly instilled within the community. On top of that, as we go back to the agri and rural people, planes and helicopters are part of the way they do business. So that's not purchase of passion, But camp drafting, anything to do with horses, including racing, but dressage and so forth, but mainly camp drafting within our region. The big camp drafters at Paradise Lagoons up home, so if you're around, come up, just over Easter. So there is that passion investment there with the horses, and to select, the string of horses for that event. And then, of course, you need the gooseneck, and then, of course, you need the truck to pull the thing. So. There is a very diversified, I think, approach throughout the region as to what that passion investment is.
Thank you, Pat, Erin and Scott, for sharing your on-the-ground insight with us. It is very much confirmed this downturn was different. There are certainly ongoing significant economic risks, including inflation, interest rate rises, and consumers faced with a higher cost of living. But by entering the current cycle without an overhang of real estate inventory meant there is an air of confidence that any asset repricing will be met with perceived value opportunities for our private clients. Real estate has been nominated for being the top opportunity in 2023 to create and grow wealth by our private clients, ahead of technology opportunities and equity markets. And as we know in property, in every sector, there is the need for better, greener and more innovative spaces to meet occupier and purchaser requirements.
Thanks to our entire Knight Frank team for an amazing job producing the Wealth Report for 2023. The report is now live, so please download your copy now via the links provided or visit our website, knightfrank.com.au, for more insights. If you have any questions or would like more information about both commercial and residential real estate in Australia or around the globe, all our teams are on hand to discuss your next steps as you plan the year ahead, so please do reach out. I'd really like to take this opportunity to thank our host Michelle and our panellists Erin, Scott and Pat. What a great job. Finally, thank you for joining us. Bye for now.